Alright, dude, you should be able to hear me now. I'm going to close out of this and go into paper trade. Durango wanted me to look at a stock too. Let's see if we can find this ticker. MTW. Alright, so here you can see most of my positions. Honestly, like a lot of this shit I can just kind of get rid of. I was kind of playing around with this. This is just in your monitor. But a lot of this stuff doesn't even really matter, like this Vega and Theta. Just because when I do a spread, so let me go to one here. So I'm buying the 40 call and selling the 42. So the Greeks kind of offset themselves for the most part. So that's why I really like verticals, is because it completely offsets itself as far as like the Greeks. So it's literally you're just going long or selling short. It's that simple. If you stick to the vertical calls, if you go naked and stuff like that, then it kind of gets a little bit different. But it just offsets itself. So it's really simple. But you can see. So this 40 call, this is the one that I bought because I want to go long. It's up 92 bucks. However, I sold the 42, so I am down 62 on that one. So it limits my how much I can win. But like I said, it offsets these different Vegas, or I'm sorry, Greeks, Vega, Theta, and the other ones. So I really don't know much about the Greeks. I'm just literally going long or going short. And I think every single one of these is a spread, or was a spread. Yeah. So you see, like, it's literally all I do is just spreads. So if you stick to that, it's literally just long and short. It's kind of simple, and that's what that chat with traders 69 says. He's like, literally all I do is just do that. And I think he does do some like naked long and shorts, but for the most part, that's about it. So this is kind of how I do it. I have my watch list or whatever. Obviously, I don't have mine over here because I'm on paper trade. But I'll have my watch list over here and legit like collapse all this stuff out. And you can even remove these too, because all this stuff's pretty much junk. So I can literally just pull up my entire scan list here. And then obviously this is like my penny stock, like fucking hoarding list. But I can literally just go through and hit the down arrow. And I don't know if you know about this, but if you click this red here, and the red here, and the red here, and then I can set different time intervals here. So, oops, 1 hour. And if I click on BPMX, I can literally hit the down arrow, and it brings me to my next ticker. So I can literally just click through, down, down, down. And that chat with traders number 69 said that you shouldn't spend more than a couple seconds looking at a stock, because then you're almost trying to talk yourself into a what you want to see. So I kind of limit it. Like if I can't see it right away, then I just go to the next one. Durango's here, MTW. So that looks really good. Besides, that was a pretty big move today. I don't really like getting in this late just because I don't know, you're so far off of support. There's so many good trades out there, and I'm trying to be more picky, I guess you could say. And obviously you see this long run up, and fractal energy is down here. So I'm sure you're kind of familiar with this. It's exhausted here. You might see a good pullback like tomorrow, and then may look to get in there. But the one thing I want to talk about, and this should be a perfect example for this, is the spread on options. This is like very crucial because you can like lose a lot of money on just the spreads. So you see the spread here on these is quite a few cents. So I don't want something like this unless it's in my favor like greatly. Like if I see a great setup, then I probably won't mind the spread too much. At first I kind of shied away from them, but if you're going to hold it for long enough, you can kind of work your way out of a bad spread. But literally, if I take this trade right now, I'm going to go in the hole, and it's going to be like, you know, maybe $5-10. But like as soon as I submit, I'm going to be in the hole. Like just by the way that the spread is. So expect that when you initiate this trade, you're going to be in the hole. Whereas, so we saw that was a spread of, 30 days out is about what I'll do. So the first in the money call is a spread of 15. Now, like the SPY, that's one that I'm trying to really learn here. I know like right likes IYM. That's another very liquid. But here you see 30 days out, March 17, and look at that, the difference of the spread here. So I have literally 2 cents compared to 15. So this I can jump in and not lose any money right off the rip. But it's definitely got way more open interest. So there's the volume and the open interest. It's good to know the difference between volume and open interest. I wish I could tell you exactly what it is. I just know that I pay more attention to open interest. I want to say, and don't quote me on this, I probably should go look this up myself after this, but the volume is more so what is trading in one of them, put it this way, one of them is calculated the amount of contracts that are currently open, currently out there, and I want to say that is open interest is the, so there is 139,500 like contracts out there for this strike price, but 40,000 of them were traded today. So let's say it's for example, you come up here, oops, yes, like this one. So I have open interest, but my volume is super high. So what this is saying is out of 52,000 contracts that are out there, there was 104,000 of them traded today. So it can be deceiving. Something might just get flipped a lot, but it's good to know the difference between those two. But that's another thing I want to show you guys is the spread prices, because you can easily, like SRPT was another one that I was in. I took this call because I liked it, but we'll look at that like spread price right there. I mean, that's just absolutely ridiculous. So hindsight, you can see where I'm at right here. Hindsight, it probably wasn't a great trade. Now my spread out here is a little bit better, yeah, but it's, the spreads can just eat you alive if you don't know what you're doing, or don't know what you're seeing, I should say. So I'll just quickly go over buying a call so you guys can see kind of what I look at, and just as far as like buying an actual call, like legit clicking the buttons, because it can be confusing. I've been doing this for like what, 12 days or whatever. I've had multiple calls where I bought something and I'm like, I totally bought the wrong put and like sold the wrong put. So I was going the complete opposite direction that I wanted to, and I didn't notice it until like I see the stock climbing and fucking my amount is just declining, and I'm like, that's not right at all. So yeah, you'll figure that out real quick. Win is another one that I'm in. This is another I'll switch over to live and show you guys. I got a TheoTrade like watch list, and a lot of those stocks, oh shit, I can probably show you in scan later. I'll write it down, I'll show you after this. Weekly trade watch list. Alright, so I'll talk about that in a second. Win is another TheoTrade favorite. I feel like that should go out farther. Maybe not. Yeah, this is just the one that's really choppy. So I personally, on my real time, I have 78 minute, and you'll see as you watch some of like Doc Severson's videos, he goes off of like a 5 times principle. So 1/5 of the day he computes out to be 78 minutes. So I'll throw that chart in there as well, and that's kind of the one that I base myself off of, but I'm still trying to mess with my timelines. But when, so we can see we're kind of exhausted here on the 1 hour. Let's just say, I think I'm actually long on this trade. So we'll just, for shits and giggles, we will initiate we'll go long on this, just that way you can get used to long. So let's say I want to go long on win, so I switch over to trade. Obviously this is pretty simple. I will click on how I personally do it, and you can come up here and change your strikes. So I can show more strikes. Really, you only need a couple, because I'll show you what I do. I buy one in the money, so you can see your blue here is in the money. 97.5, so that is a 97.5, so it is already in the money, and it is 30 days out. you can buy weeklies, you can buy monthlies. The difference with weeklies and monthlies is open interest and volume. So this is a little bit farther out. You can see the difference in volume and open interest. Your weeklies are going to have less open interest and volume for the most part. So probably stick to monthlies if I can. However, if it's a relatively liquid stock, you can do weeklies. I try to stick to, I think, 28 to 35 days is what TheoTrade said. So buying expiries in that time frame. But you can see the spread here isn't really too much difference. 25 cents and 30 cents. So not too big of a difference, but I try to stick to monthlies for the most part. So I will buy, in this case, so what I'm looking for is a $2 wide spread. This one happens to be 3.5, or 2.5 right here. The farther you go out, you won't have much of a choice. So you see here it's a difference of 2.5 in the strikes. And let's say I go up to this monthly, I have all kinds of different ones. So usually it's, you get down to 1 or half points. So when I actually bought, you can see this trade, I bought this one exactly how I'm going to set it up now, and it has shifted up 2 strikes. Actually, now that I'm looking at it, this is another one that I digged up the expiry on. So I shouldn't have been buying this close. I have 2 days till close. So I want to be 30 days out. And again, I'm trading off my phone right now for the most part. So if you aren't paying attention to what you're doing, you can buy the wrong expiry. So now you're going to realize profits faster, but then also you're going to expire faster. So I'll have to go and fix that. So I'm going to buy in the money calls. Buy. For this play, we're going to do vertical. It's going to pop up down here. So this is a debit spread. I'm buying 97.5 calls, and I'm going to sell. Like I said, I generally want $2 difference. However, this is 2.5. So what you're looking for is a 1-to-1 ratio, and I'll kind of explain that here in a bit. So I have a 2.5 wide strike price. So generally I want this to be, I'll show you on this next screen. We'll get to that in a second. So I've just been doing one contract. So that way everything's skewed to a smaller account. That's what I'm going to start on. And then here you have, what price you want to pay for it. And then also it's down here. So it's kind of like the difference between your bid and your ask here. So that's the cheapest you can get it for, and that's the most expensive. Now I can go farther down, and you see this arrow shift. So I'm trying to get a cheaper fill on it, which is going to take a while. It's no different than a stock. Like if I am down this low, then it's going to take longer to fill. So generally, depending on how long I think I have, I might stay down here at this or drop a couple points if I expect it to come back a little bit before rallying. Or if I need to get in right now because it's taken off, I'll go up a bit. So for this case, let's say I go up to 150. So 150, expiry's right, one contract, buying the 975, selling the 100s, and I'm going to confirm and send. And this screen is the one you kind of want to pay attention to. So my max profit on this vertical call is $100. My max loss is 150. Now generally, like I said, I want 1-to-1 odds. So this is not quite the right odds that I want. And TheoTrade's pretty big on 1-to-1, at least from what I've seen in the small accounts video section. But if I really like to trade it, I'm going to take it no matter what because I'm confident in my strategy. So in this particular case, this isn't too bad, but you can see, so watch, 100 and 150. Now I go down here and I change this price. Say I want to get a 143 fill. Confirm and send. Max profit 107, max loss 143. So your odds will change based on this because you're just filling at a lower price. So your max profit is maximized and your max loss is then minimized. So then I'm just going to send it. And now you're like, oh shit, did I get a fill? It will fill up here in this top corner if it does. Now, right now it's after hours, so we're not going to get a fill. But if I come over here to monitor, I can see my working orders here. So I come down my working orders, and this is this call. It's working. It has not finished though. So I can go in here and right click like, it's taken off. I need to get in. I can cancel / replace an order. It's going to pop me up to the same exact screen, and I can increase this amount, confirm and send. So I see right here, it canceled the buy and not put a different buy in. And there's my working order. So I'll go ahead and cancel this guy. Boom, canceled. In this screen here particularly, like once I cancel out of a trade, you can see like my open loss, my profit is gone. That's kind of why I went to that spreadsheet, because I wasn't able to accurately track my profit loss. But I did find this account summary, and I can come down here to profits and losses by symbol, and it will pull up all this stuff. And see, again, this is skewed to that, but I can go into options and look at these different. Basically what I've been doing is going to my phone and getting the history off of there, but I got to kind of play around with that more. I'm sure that there's something that can kind of show me my profit losses. You can see I'm up here 130 bucks after being down a bit, just kind of messing around with stupid shit. But yeah, I gotta kind of figure that out a little bit more. Oh, here's profit losses 530, but I don't know, that's something else I gotta play around with. So this weekly thing I was gonna show you, and then I'll kind of ask you if you have any questions or anything like that. But yeah, everybody makes it out to be so much harder than what it is, and there's so many different setups that you can play. A butterfly, calendar, diagonal, all this shit, and I just think if you start off on vertical calls, if you want to venture into something else, it may give you some better odds than you can. But that I keep referring back to that chat with Trader 69. He's like, that's all I do is just vertical calls and spreads, and I play some futures and stuff like that. But he's like, I wait for the markets to kind of give me a good buy signal, and I just load up once or twice a month, and then I'll play, whatever I have, buy here and buy there. But like right now, going to the indexes, like the SPY. So I was saying today when I posted my profit losses, last 12 days, I was buying in through here, and the thing just ran up, took a lot of my profits here. So it's kind of hard for me to, not do well on this string of 12 days. So, but in here, let's see. I want to show this. So you can set your scans up. Like I have a bazillion D scans. So I have my like RSI lags in here, and then shit, all I've been using is the ones that you gave me. So I have different time frames, 2 hour, 4 hour, and then I have in optionable and then in weeklies. And then I also have short RSI lag, which I want to kind of tweak the code like you did for short RSI lag too, so we can see ones coming down off the top, like that car call that I had. That was really nice. But if I can set up my scan here, so I'll pull up load your scan. So I'll just pull up your scan here. And let's say we're doing it for options, so I'll get rid of this. I have yours in the daily average volume. I bumped mine down just a little bit. But if I scan in and I come down to public, so I can scan in. I mean, if I want to do Forex futures, but the ones that I'm concerned with are weeklies. So I want to say it was Market Watch. Let's go in here for a second. So here's your heat map. Actually, I can do this. I'll just get rid of all this and I'll scan literally just weeklies. That'll give me, so there's 436 tickers that have weekly options. So you can see like some of them down here have are some junk or whatever. Actually, I can pull it up over here. So public, weeklies. I'll go into the charts here and you can see what I'm talking about. So I'm scanning these weeklies because these are the stocks that are liquid enough that have weekly stock options. So you can see SPY, Bank of America. So I go into trade and I have weekly options. So I have more volume, more open interest. I go to the SPY. Obviously we know that has a ton of weeklies, ton of volume. Siri weeklies. Now it doesn't have quite as much volume, but it's still better than like some tickers like the SRPT that I was playing with. I mean Twitter, JNUG, AMD. So this is 460 some stocks that have relatively good volume. So I got the volume average here, and down here at the bottom I have some indexes and stuff like that. But down here, this ticker, I mean, still almost 100,000 volume average. So I think this is one of my favorites to scan in because it really reduces it down to optionable stocks that have weeklies that give me more options in my options. And then you can see like my results here. So I'll go into personal. So yours on the weeklies, and legit it gives me 4 tickers. So here's that Monsanto. This one looked sweet. I mean, kind of broke out here of these projection points. I think the 4-hour looked pretty good as to the upside. It had room to move. Oh, it gapped up today. That's what it was too. It gapped up, and I'm like, yeah. That's the only thing that kind of scared me. But oh, that was the one that gapped up, and that scared me. So I'm like, nah, I think I avoided that one. This was the one that I really liked. So I'm like, oh, sweet, flag pattern here. Get a nice run, consolidation. Fractal energy comes up. It's coming out of the bottom. I'm like, oh, this is perfect. 4-hour, is coming out of the bottom as well with good fractal energy. I'm like, this is great. But then earnings tomorrow morning, so I avoided that one. And then I also have the TheoTrade watch list, and I can share this stuff too. TheoTrade watch list. so you can see here, this is a watch list legit from TheoTrade that they put a lot of their liquid stocks on. So this is some of the ones that they like to play. And you can see the average volume, I mean, right around pretty much 1 million. So this is a pretty good list as well. But I think pretty much everything in here has weekly options. So weeklies. Yeah, so I would assume everything in here has weeklies. They probably just simplified that list down a little bit. But yeah, that's, I mean, pretty much the gist of it. Like, I'm literally just going long and short on vertical calls. I mean, it's not rocket science at all. But you guys got any questions or anything? Oh shit. I didn't see the live chat on YouTube. I had something over top of it. My bad. I'm recording this, so I mean, you guys can share this out to general chat and education if you want. Yeah, the Greeks definitely scared me at first too. Like I was trying to like learn all them, and I'm like, fuck, like I don't know what the hell this shit means and how it all works together. But if you just stick to vertical calls, you don't even have to really worry about that at all. I mean, everything I'm doing, I see the stock move up. Oh shit, I'll show you that as well. This is really good for, I know you said you wanted to get into some day trading as well. So go to SPY. All right, so I can go over here to active trader. Now if I'm not too sure how to like buy into this. Oh, here we go. Yeah, I don't know. I'm still trying to get my entries and exits, well, more so entries, figured out in this. It's called DOM, depth of market. So I buy in where I want. Like, let's say I'm expecting. We're going over here because this is going to be a day trading type setup. So we'll go over here on the 5 minutes. So I'm expecting, you know, this thing's kind of just going up, so I'm going to expect it to go up. So I'm going to go over here to the trade tab. Let's say these expired. So let's say I want to trade these. They're expiring soon. I expect to go up, so I'm just going to buy, like Baron was saying, I'm going to buy just a regular call. And I don't have experience with this by any means, so don't take my my word as far as day trading. I haven't ventured into this, so you would have to throw this off of him. But I want to trade this 235 call that's in the money because I'm expecting to keep rising. So if I right click on this, see this code right here, copy this. That's my SPY, 17 expiration on the calls of 235 strike. So I'm on the 235 strike here. So I'm going to copy this, and you see this price of 78 and 81. I thought this was like sweet as shit, because I'm like, oh, this is great. I go over to charts. Now I have my 5 minute chart of the SPY over here. And I'm going to go up here, and I'm going to paste this. And I legit have the price here. That's my VWAP that's in here. But this plots the price of this ticker. So this is just 1 day out. I'm on the daily here. I gotta switch out of the daily. So 5 minutes. So we'll look at the last 2 days and you can just see kind of this correlates. Some of this stuff I don't really use it. I use this projection points, but this option price, this IV percentile, it puts this thing up here in the top corner. But like I said, I don't mess with the Greeks. So I can share all this stuff if you guys want, but I don't really use it. I have it in here, but I don't really use it. See, I don't know what that is. Theoretical. Get rid of that too. So you can see the last 2 days here as the price went up. Oh shit, got these linked. So as the price climbed here, you can see the price of the option climbed here. And this is just this specific call, so the 235 call on the SPY, this expiration. So this particular call, I can plot this out. And then also when I buy into this, this is the I think it's DOM or depth of market. When I buy in, this is live money too. So anyways, I'll buy in here or wherever I want to buy in at. And like I said, I usually go into trade tab and buy in. But then it will give you a little balloon over here, and I can set up if I want to, say I want to get out at 90. I'll put my limit here, and it's no different than like when you have a limit over here on your Thinkorswim. But I can go ahead and move this. So as this thing's just flying up and flying down, I can go ahead and move this, move it to wherever I want, and then it'll sell. So you can like day trade very, very fast inside this DOM. And that's just this active trader right here. So relatively simple. So Chris talked about closing trades early or holding till expiration. I have not held anything till expiration. That would be a better question for Remington. So personally, let's see, I had the TheoTrade rules on when they want you to get out of their trades. I can share this stuff as well. So the rules for exiting. Calculate and set limit order for 55% of gain. And these are like their rules for their small accounts. I don't. 55% of gain, like you shouldn't just get out on a limit order for 55% of gain. I get what they're trying to do is, set this parameter for everybody, so that way people aren't flying down the other side. But you should know how to actively manage your position. If options are in the money near expiration without exit, close trade to avoid settlement. So if you're in the money near expiration, close the trade to avoid settlement. So yeah, I got you. I'll definitely send you this. It's like a spreadsheet here. They got like rules for entry and rules for exit. Some of them I pay attention to. Some of them I really don't. But it says allow worthless positions out of the money to expire. Let me switch back over. Well, yeah, I'll switch back over in the meantime to paper trade, so you can see why you can let out of the money options expire. basically they're not really worth anything, and you're not on the hook for anything. So if they're out of the money, you just let them expire. With 4 days or less, close all or part of the position if there is still value in the trade. So basically, yeah, he's saying don't hold till expiration. Within 4 days, get out. Come on, girl. There we go. So yeah, I said when I kind of fucked up on their day. I was kind of wondering because this thing, look at that profit loss in the day, 102. That shouldn't be like that. Um, not if you're buying 28 to what do you say, 28 to 35 days out. You shouldn't see massive swings like that if you're buying that far out. So I was kind of like watching that one today, and it didn't make sense to me. I guess I should have checked the expiration date on that. So you can see here I have 2 days left. So that's why that thing was flying up. My 100 call that I sold is worth 80 cents. So I'm down 95 bucks on that. But what they're saying is just let it expire out of the money because as these 2 days run off. Now, I'm just going to close this whole position. This is my first time really going through these rules. So yeah, I would be closing this whole position. I'm not just going to let it expire just for the hell of it. But basically, when it starts getting close to expiring, I'm looking for a good exit. And he has other rules too. If 40% is realized within the first week, close it. Like I said, you should be able to manage your position without having to like go off of that. You know, I mean, you should be able to find your own way. But it's a good starting block for sure. That's kind of what I started off of, and then I'm like, I shouldn't really be closing that. Strategy on verticals, always buying in-out spread. Yeah, as of right now, I'm still so raw to it. So legit. Let's see here. There we go. Yeah, every single one of these is a spread. ENDP was a put spread. Cara was another put spread that I had that crushed it. I can go over that one real quick too. So in a bullish market, I don't really want to. I don't really want to trade against the market because especially like penny stocks are a little bit different, a little bit more volatile, and will trade against the indexes somewhat. They still are going to follow. Obviously, you can see still follow it somewhat, but you still will see like some hard runners, out of nowhere. But Cara here, it's actually this one ran really well. I mean, it's just been like absolutely crushing it. But you can see these hard pullbacks. But it came up to here, and that's why I need to go out farther on this. So you can see here, and my stepbrother actually was in this one. So I told him, I'm like, hey, be weary right here, seeing some like high, historical resistance right here. I'm like, dude, when it starts reaching up there, I'm like, be weary, and it hits here pretty much a triple top. But I saw it come up here and it hit this 17 and come back down, and I'm like, we'll see. And it started coming back down. I'm like, dude, I'm telling you, get out. Crashed down here, but it came up, hit this again, and I think I bought put somewhere, I think after the second one, and I wrote it down to here and sold down here. So one in the money, one out. Would you ever buy a call with both out of the money when you're expecting a larger move? That's one thing I have to play around with as far as maximizing my profit. So yeah, I gotta play around with it. So let's check right here. We'll go into SPY. A little bit more liquid, so you can kind of better gauge it. So if I'm expecting this thing to just keep screaming. So if I buy here, so I'm gonna buy 2 out. So here I have two strikes out, and my spread here is 97. So this is something exactly what I'm looking for, and you're going to see my max profit's 103, my max loss is 97. So if I have 1-to-1 odds all the time and I'm winning 80% of my trades, then I know odds are in my favor. Whereas if I'm taking huge risks and I like lose a couple massively, then I need to reevaluate. But if I'm expecting a big move, so you can either what I need to evaluate is if it's best to buy farther outside of the money or best to buy a farther spread. I think the best way to do it is buy a farther spread. So let's say I come down here to, let's say I double it. So my max profit is now 240, my max loss is now 160. So that's another way to do it. Now let's say, like you said, buy further outside. Let's see the difference here. Okay, so there's just two different ways to do it. Are you confident in it? If I buy further out, then yes, I have a bigger profit than my loss. But if I'm expecting a big move, yeah, I guess that's something we'd have to play around with, because you're smart. You can probably figure that out. So 136 to 64. $36, 64, 240, 160. So it's all about playing your odds. That's why I love options. So it's all about like the math of it. So to me, I think I would play. And it's hard to say too, because if I play further outside the money expecting a bigger move, what if this guy never gets up into the money? Then I'm shit out of luck. So maybe, I think if you're expecting a better profit probability, your odds are much lower at happening. Yeah, exactly. Yeah, exactly. Your odds are lower, bigger profit. would say probably. Whereas if you're down here, oof, oh, that's why 10 contracts, not quite that many. So yeah, here, I just think that you're still in the money, which I still like, but you are offsetting your risk still. Whereas if I did, like, let's say I went naked. Get rid of this guy. Delete. So if I'm expecting a huge move, I just went naked, buy, single, confirm. So my max profit is infinite, but my max loss is 2,600. So that's where you can see, yeah, of course my max profit is infinite because it can run forever, but my max loss is 2,600. So it's just, oh, well, it's also because I got 10 contracts. Infinite 267. So like I said, I'm kind of new to it too, so maybe somebody else can give you a better answer if you're expecting a bigger move. But also too, over here, this is something to pay attention to and get familiar with. I think TheoTrade's got a really good couple videos on this on YouTube, but this is expected move. So my implied expected volatility, and then my expected move. So you can see this monthly here, they're expecting more volatility here, whereas I drop down, it's 9% just after that. So when these monthlies come close to expiring, you're going to see bigger moves. Well, shit, perfect example is you see this big move right here, and this thing is expiring 2 days from now. So when we're coming up on this, you would expect probably a bigger move as well. It's at 12% now, but what this shows your plus or minus here. So it's expecting to move $1.80 within 2 days, either to the upside or to the downside. So I can go in here and look at the open interest in volume compared on both sides. My open interest here compared to my open interest here. So I think both of us can agree that everybody's expecting it to go up rather than down these next 2 days. I love the math aspect of this much better than penny stocks because I can see numbers and calculate things out a little bit better. Yeah, man, you got anything else though? It's pretty much a pretty good run through of it. I can get you, I'll write a note to get you those rules. I really haven't looked at them in a few days since I really started. I kind of was like following them and I'm like, yeah, I don't know, kind of figured out my own, but they are based largely off of that. By a vertical call, your long call is in the money and profitable. Could you close just long call and leave the short call open, hoping maybe it will drop again? Yes, absolutely. Remington just talked about this the other day. Had to be within the last couple days. But basically, he will do that you know, I'm out 30 days, so this thing can go up and down and sideways. So yes, like that is definitely possible. Um, However, he said he doesn't, from my understanding, he does not like to go, doesn't like to be naked very often. But he will buy, let's say he's expecting it to, you know, drop. He will buy an offsetting. Uh, so if he sells the call after it ran up and he's expecting to go down, he will buy an offsetting, you know, stock or whatever, or an offsetting option just to minimize risk um, on that trade. But yeah, that's also something I haven't messed with too much is reversals because, for example, when I bought that one, pull it up real quick. I bought this one right here. So on the daily, I'm like, yep, give me a good buy indicator right here. I bought here, and then this big red candle just absolutely crushed me. Um, Thankfully, with a vertical call, it wasn't really that bad. Um, but it would have been a good time to cover that sell position or that short position. And then you see today it runs up a lot. But that is definitely an option. I don't have much exposure to it, but it's definitely something. I think if you master the spreads, that's something that you definitely need to have in your repertoire. Is the ability to kind of like reverse yourself out of a position like that. Cool. Yeah, man. That's hopefully it should give you at least enough to get going. Like that's what I was saying. I kind of wanted to do this so that way you guys could see it isn't really that hard. And if you get going, you can kind of, if you know what you're doing, you can at least start paper trading and get going. Because all I'm doing is just going long or short. So yeah, hopefully we can at least get going and get some reps in paper trading. Learn as you go.